Good morning and welcome to the Friday Financial Review. My name is Paul Griffiths. I'm a European financial planner. Today we will be discussing the Spanish portfolio bond. This is a term that is heard and used a lot all over Spain. So I'm here to make it very clear, very simple on what you, the client, should be asking and should be looking out for, and really for me to explain to you in a clear manner what is a Spanish portfolio bond. Now, the portfolio bond is a technical term for what is a life assurance contract. These contracts are issued by large institutions like AXA Life, Quilter, Aviva, Utmost, SEB, One Life, Lombard. All these institutions will be typically regulated in jurisdictions such as Luxembourg, Dublin, the Isle of Man, the Channel Islands. So the term portfolio bond really is a life assurance contract. It is a wrapper. It is an investment wrapper. Now, what makes a Spanish portfolio bond a Spanish portfolio bond? So, making things compliant and in line with the taxation rules for Spain. Well, first off, they have to be issued by institutions that are regulated within the European Union. Most popular, you'll find them in Ireland, Dublin, or in Luxembourg. And they must also have fiscal representation here in Spain. So, we're now going to discuss why we use a Spanish portfolio bond. What does it do for you, the client? Let me be clear. First off, the use of Spanish portfolio bond is certainly not a one-size-fits-all. It is not for everybody. So very vital that you seek advice from a reputable, well-regulated financial firm to give you the correct advice. But I want to clear some real benefits of using a Spanish portfolio bond in the right way. The big three is what I like to call the 3 zeros. I'll come on to the 3 zeros in just a second. One of the biggest issues we have in Spain, as you may already know or will come to know, is the need to report your non-Spanish based assets on the Modelo 720. For those of you who've only just arrived towards the end of last year or arrived this year, you will not have to do this until by March next year. But you'll need to know what information is needed. Simply put, the 720, the Modelo 720, is a declaration report for you to declare your assets. 3 categories: property, cash, investments. It is important to understand what your obligations are and why I mentioned this in a Spanish portfolio bond video. The big 3 zeros of a Spanish portfolio bond is zero number 1. Anything held within a Spanish portfolio bond that is fully compliant, you have zero obligation to report those assets within your Modelo 720. Great. Zero number 2. As you trade or as your advisor makes changes, recommends changes within the Spanish portfolio bond. The action of realizing a gain when making those trades are not reportable and are not a taxable event. The third important zero. If you hold assets within your Spanish portfolio bond that are paying an income, dividend as they're known, or distribution as they're known, as long as it's within the Spanish portfolio bond, there is zero reporting liability and zero taxation. These three big zeros in itself makes the Spanish portfolio bond an extremely tax efficient and also tax simplifying on your daily lives. For those who've done our Modelo 720, you will know full well if your investments exceed, or if your investments change in value to the tune of €20,000, whether that's the value's gone up, whether that's the value gone down, whether that's you decided to take some money out and spend it, you have to report it on the Modelo 720 on the subsequent return. But if these assets are all in a Spanish compliant bond, well, guess what? It does not matter what the level changes. There is zero reporting liability on the 720. So it will simplify your life. There are a huge number of additional benefits of why one might want to use a Spanish portfolio bond. For example, for those who are fortunate enough to have accumulated or amass a certain level of wealth, you will know that you have Spanish wealth tax to consider. And especially for those who perhaps rely on their investments and savings to provide part or the majority of their income. By having those assets within a Spanish portfolio bond and that Spanish portfolio bond paying you an income, it can actually help to reduce your tax liability on wealth tax, purely because when it comes to wealth tax, you will only pay a maximum of 60% in taxes on your total taxable income. Gets complicated, so I'm not going to expand on that subject too much. That is a separate session. Other benefits include succession planning. I told you already that a Spanish portfolio bond is a life assurance contract. You are able to name beneficiaries of that contract. If your beneficiaries are outside of Spain, when you pass away, because the portfolio bond is either in Ireland or Luxembourg, the chances are your beneficiaries may not need to go through probate nor the Spanish Modelo 600 declaration in order for the life assurance company to pay out those benefits to your beneficiary. It doesn't mitigate potential tax liabilities that they have, but what it does do, it gives them the money just in case there are significant taxes due. So what a great way to pass on residual wealth to your loved ones. Furthermore, the Spanish portfolio bond designed correctly, you are able to potentially gift some of that portfolio whilst you're alive to your chosen beneficiaries. Now, one of the best ways to reduce one's wealth from an inheritance tax calculation, as you know, is either to spend it or to give it away. So, just to recap, we have the three big zeros. No Modello 720 reporting required. No reporting of taxes on gains within the portfolio. No reporting or taxes every time you receive a distribution or a dividend within the portfolio. Helps mitigate potential tax when it comes to wealth tax. Helps to pass on assets to your loved ones when you die. Gives you the option to gift your assets to your loved ones whilst you're alive. Now, one thing I've not mentioned is, well, I'm not hearing taxes when I'm spending the money. Well, unfortunately, a Spanish portfolio bond is not completely tax-free. You will pay tax, but the great news is it reduces the effective rate of tax. You make your money, it's growing. You decide you want to make a withdrawal. You make a withdrawal, the effective rate of tax on that withdrawal is greatly reduced because it's only the gain portion of that withdrawal that is taxed. And again, any competent, well-regulated financial advisor will be able to advise you accordingly. So we've now heard about the benefits of the portfolio. I'm just going to touch on a very important subject that a lot of people within Spain do feel that a Spanish portfolio bond is either too expensive or does not grow. These are unfortunately not myths, and that is because it's all down to advisors who are basically sheep dressing up as wolves. Unfortunately, in any industry, we're going to get cowboys, and I do sympathize with those who have been caught out in the past. With a Spanish portfolio bond, the cost of having it is actually not really any different to a simple investment platform that you may already have. For example, those of you who are British, coming from the UK, you may have your investments in a Hargreaves Lansdown Vantage account or a SIPP, and you have a series of funds in them. If you manage it yourself, fine. The cost you're going to pay, high end, is just under 0.5% to Hargreaves Lansdown. A cost of a portfolio bond, actually, it's only, well, it's actually under 0.5% a year to actually have the portfolio itself. It's actually not expensive at all. Okay? Where it becomes expensive is because advisors not only tie you in for a long period of time and give you charging structures that have big penalty clauses, but they then subsequently recommend very expensive investment funds. For those of you who are on my YouTube channel, you will see previous videos on fees. So when you are speaking with an advisor and they're recommending a Spanish portfolio bond, ask them, I want options on fees. We want option on fees. We want to see what the cost is for the individual investments themselves. And if the average cost of those investments alone are more than 0.75% per annum from the fund managers, I would have serious questions about the advisor. Okay. So that is one of the biggest things that is a drain on a Spanish portfolio bond, and why a Spanish portfolio bond does unfortunately have a bad reputation, is because advisors are greedy and using expensive funds that do not work. Worse yet, they're using derivative structured notes that do not work. Thankfully, over the years, the institutions have recognized this, and most institutions now will not allow a lot of the expensive assets to be placed within a Spanish portfolio bond. Okay, so to end on a positive note, the Spanish portfolio bond is a great tool, financial planning tool, to run alongside your retirement. It will simplify your retirement. It will save you on unnecessary taxes. It will ensure that in the eventuality that your loved ones are taken care of in a simple, easy manner, and not having to go through probate processes, which for anyone who've had experience of probate will tell you can be anything between as fast as 6 months, as long as 3 years. Why you want to put your family through that, I do not know. So, thank you very much for watching this Spanish portfolio bond edition. Hopefully I've been of use to all of you. Please feel free to share my videos. Please feel free to subscribe to my YouTube channel, follow me on my Facebook, my LinkedIn, and soon enough I'm trying to catch up with the youngsters. I do have a TikTok now, just trying to work out the content and how to use it properly. But I do want to thank you all for your support. As you know, I'm here in Europe, financial planner. If you need to have a chat, if you need to discuss any aspect, facets of your overall finances, do not hesitate to get in touch. Thank you very much. Have a wonderful day, and I'll see you all next week.